Well, in case you're new to the channel and new to the community and you haven't ever run across him before, oh, I hope you didn't get hurt. Bradford Ferguson is our guest every Thursday night, unless he isn't here. Would that be about right, Bradford?
That'd be right.
And Bradford has a very unique group of people as clients. He refers to them as Teslainaires, I believe.
No, and rebellionaires, yeah.
Rebellionaire is the name of the website, rebellionaire.com, and the company name. And so folks who are all in or a lot in, more than normal in, let's say, to Tesla, he encourages them to become his clients. And we'll be talking about that a little more in a few minutes. But today has been a particularly big day for the Elon Musk world. We started off with a really amazing Starship launch. I know you're a big space fan also. What were your thoughts with regard to Starship today?
It seemed like a successful launch. You had Super Heavy. That's the stage 1 booster, which is it's just absolutely massive. It came down. It seemed to come down really square. So that was great. They eventually want to land it on land and have the chopstick tower, catch it. So that looks ready for them to try next time, maybe. Yeah, I don't know what all they need to feel comfortable with that, but I think that one's ready. And then Starship will need a little more work, but it performed great. Where I think it needs work is the flaps. Get a little extra heat from the heat shield. There's just some critical spots that are, I think, hard to cover, and you could see on the video that those got exposed, and but still it was able to perform the flip and to do a burn to slow down its velocity, so it still looked like it may have landed square in the ocean. So both two wild successes. But they have a little more engineering work ahead of them on the heat shield, and there's probably a lot more for them to figure out. But yeah, that's a really big accomplishment, and definitely hugely distracting for my day, because I was following it and enjoying it and hooting and hollering when they succeeded.
Yeah. So as a really early baby boomer, I was, alive and watching when the first rockets went into space, when the first Sputnik, when the first American astronaut went into space, etc. So, those were extremely pimple making. But since the two boosters landing simultaneously, that was a major thrill. I mean, that was just kind of, you could not have the hair stand on end on that one. But man, if they catch that booster in that Starship and in the giant chopsticks, that is going to be a moment in history. That was something to see.
And the implications are this, right now, SpaceX is the only one that reuses that first stage booster. So there's a second stage that has the satellites and the payload, but you have the first stage that helps that second stage get to orbit. Right now, SpaceX is throwing away that second stage, and they're able to save that first stage on the Falcon 9. No other company is able to get payload to orbit and keep their first stage booster.
Right.
So those are the Falcon 9s that gotten reused over and over. It greatly reduces the cost to get payload to orbit. And the Super Heavy and the Starship are even bigger and should have even better economies. But the key piece there is the Starship. They want to get it to the point of reusability. So, they're working on the heat tiles on that, and, be able to get it back to Earth, without having to do like a really long refurbishment of those heat tiles.
Not only not a long refurbishment, ultimately they want to have it ready to go again in an hour or something.
Uh, I
Yeah,
don't know if it'll work like that, but like if they could get it to a place where they don't have to do much work, they can just ship it back and just kind of get this conveyor belt going or
right, right,
whatever.
right.
It'd be
Yep.
pretty radical.
Pretty radical. It's going to change so many things, and we can spend an hour on that. All right, and then so in addition to that, Tesla had a new product out today. Nobody was really expecting it. It was a big shock, but I understand you've already bought one. So, what came out today?
I bought two. So
Oh,
yeah,
two.
when Tesla tequila came out, I bought a few, and somehow Tesla got them delivered to Indiana, but now they're following all the liquor laws that they have
Oh,
around various states, and I couldn't get this new product delivered to my home, so I had someone who lived in Ohio order them for me, and so it's Tesla Mezcal.
that's
So
good.
it's a Mezcal tequila, and instead of in the glass lightning shaped bottle, it's in a matte black bottle. We might even call it frosted.
Frosted matte black. Okay. All right, and this was inexpensive, like the first tequila, right? I mean, these bottles of tequila are, it's just something you buy a bunch of and use them at parties all the time, right?
Uh, the first go around, I think they were 250 a bottle,
Yeah.
and now they're 450 a bottle. Maybe it's a rare tequila, or maybe Tesla's just clawing into us a little more with this one.
Oh, man alive. Yeah, well, they're just expecting all the folks that have made millions off of Tesla stock to plunk down 450 bucks a bottle for some mezcal. That's pretty amazing. All right. Well, see, in addition to that, Tesla did well today on the stock market, up, I think, two and some change today. And people were reflecting on, what some of those reasons might have been. But what the biggest thing that's coming up right now for Tesla, of course, is this vote next week.
Mhm.
And so people are projecting and expecting and saying what they think is going to happen. Do you have any particular viewpoint on how you think it's going to turn out?
I think there's a very high percentage chance that it passes as far as the re-ratification of Elon's comp plan. I think it's 99% chance. But I do think it's important that people vote. The vote to move Tesla incorporation from Connecticut law to Texas
Or
law.
Delaware.
Delaware, thank you.
I did the same thing a couple of times.
We're all going to be forgetting about Delaware in
We
a matter
are, yeah, it's such a small state anyway.
That's going to be tougher for that to pass. They need a 50% of shareholders to vote, but they subtract out Elon's and
No, I think Elon's going to vote on that one.
people's
I think
votes.
he's going to vote on that one.
Well, he might get the vote, but like there's some kind of weird thing with
Okay.
the number of votes. I think you need at least 50% of the votes.
In favor, 50%, 50% of all possible shares voted in favor.
Yeah.
That's the hard get. Yeah.
Mhm.
So it's the fact that some people won't vote. Somebody today was pointing out, they said, call your ancient mother and your brother who you convinced to buy the stock 3 years ago and who's completely forgot about it. I mean, there's so many people out there that are just not following it closely like us.
Mhm.
So yeah, it's going to be hard to get that all put together. Well, Martin Viecha, just before we came on, he put out up on X. He says, "Look, funny how so many people were concerned about the grid with all those new EVs. All those darn Republicans." He didn't say that. I said that, and I happen to be one. So I'm still saying all those darn Republicans that are so worried about the grid. but nobody's concerned about the grid with all of the compute that's coming on board. So we have this massive amount of compute. Morgan Stanley just did a paper earlier today, and they said that they expect the 2030 new usage to equal 150 million battery electric vehicles. So I've been talking about this for 2 or 3 weeks on the channel. So I'm sure most people that follow this channel know that this is a massive problem. It's going to be, the question is, how do we get that much new electricity even generated, much less distributed and providing it to these new data centers, in addition to the BEVs that need it, in addition to all the people that are mining cryptocurrencies that are using up another huge percentage of it. So this seems, of course, to be it would be a big stimulus for Tesla stock, because it should create, well, you and I know is already an unlimited TAM for battery storage, but an even bigger and faster and more immediate and urgent need for battery storage. So why aren't the pundits talking about this great opportunity for Tesla?
I think they're not talking about because they don't understand it yet. People don't understand that you don't need, like, not all the EVs are going to charge at the exact same time in the US. So you don't need to design the grid for everyone like plugging in at the same time. And it's as easy as a dryer outlet in your garage. Like, so if everyone dried their clothes at the same time, yeah, it might cause a little bit of a problem, but like not everyone does that. And they definitely don't understand the electricity needed for compute for the AI data centers. All people care about is seeing NVIDIA stock go up and trying to buy more, not financial advice. People didn't like it at $200 a share when it first passed Tesla's market cap. But now they suddenly like it now, or they refuse to sell it now. So I do think AI is a big deal. NVIDIA is going to double their revenues this year versus last year, and I'm guessing within a year or so they'll double them again because their supply is doubling from Taiwan Semi, doubling to tripling toward the end of this year.
So the real,
you may need a lower price, but
right.
like you need all this electricity, and nuclear can't do it all. And nuclear is way more expensive. All these people excited. It takes way longer, and even for the newfangled small nuclear plants or whatever, they're still expensive. They still take long. They're all excited about this new plant that went in the southeastern US, but that's not going to be able to tackle things in the next 10 years or the next 5. Like, all these data centers are going to be going in the next 5 years. Oh, we lost my camera, so I need to change the battery here.
Uh-oh.
I did that again. Sorry about that.
It's perfectly okay. Oh, can you do 2 things at once? No, probably
Yes,
not.
I can.
Yes, well, okay. So the outgrowth of that question, if we want to talk about the stock market, though, is you, of course, picked NVIDIA early. You're saying that they're going to double and double again. Right now, they've passed Apple in terms of valuation. They're just within striking distance of Microsoft. It could even happen this week or next week. They could pass Microsoft and become the #1 most valuable company in the world. Is that justified?
Yeah, I think it's the current price is justified, but a further outperformance versus the rest of the market, or versus like other tech stocks that have high potential, we have trouble seeing that.
Okay.
So we looked at a scenario where I think you had to assume this might not be a good one. I think you had to assume that NVIDIA is going to be at like $400 billion as far as revenue in about in about 3 years, to get significant outperformance from
Okay.
here.
All right.
And it's just such of a stretch. Like right now, that would require, um, that would mean like that this AI compute would just totally dominate all of the data centers, period.
Oh, all right. And so obviously there's the potential that competitors would come into the scene. There's the possibility that some of their customers will build their own, like Tesla, like Google. Uh,
Yeah.
so there's
Yeah, I don't really believe in that, but it's
okay.
just like, where's the 10x from here? Because
Got it.
you have Tesla, you have OpenAI and Google, they're all using video,
Right.
and video has caused this huge uptick in the amount of compute needed. But where do you go from here? And where you go from here is like more video.
Yeah. 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 Exactly. All right. Well, on another subject, Jeff Lutz said last night on this show that he doesn't think that only having one interruption in your drive per year is good enough. He says if your car gets one safety issue per year times even 6 million vehicles, that would be 6 million safety problems per year. That would be way too many. Well, if we got 10 times better than that, it would still be 600,000 potential accidents per year. What is the right number?
Yeah, I think you need to get it down to where there's less accidents than humans, and the accidents are just less critical.
Mm-hmm.
Um, so where Tesla may be headed is this um this better situation where it could be a messy middle, where it could be so good that you only have one disengagement once a year. And in that situation, people are going to become complacent. They're going to take the system for granted because it's going to be a rare oddity that they need to intervene. So what I'm hoping is, like, if they do get it so that there's one disengagement needed every 15,000 miles, that it still improves after that, within a few months. So
Uh-huh.
we don't get to this situation like Jeff Lutz is talking about. So, um, that's what I'm hoping. And, each week, each day, they're going to be getting new videos, new disengagements and interventions. So they'll be getting data. So they're not just like going to wait a year and it be this huge train wreck. They'll be getting data along the way that they can make improvements on. But
Okay.
it's going to be it may be more challenging.
We maybe see more chances. Well, speaking of challenging, AJ just published his projections for Rivian today.
Yeah.
He's showing losses through the end of 2025 and not insignificant losses. And if you look at his chart, it's not too hard to imagine that his chart, if extended, would go beyond 2025, still showing losses. Have you ever taken a look or recently taken a look at Rivian and whether you think it's investable or whether you think it's just going to slowly but surely go off into the wild blue yonder?
Yeah, I forget the exact numbers, but I think about a quarter ago, their losses per vehicle were about $43,000. And I have trouble seeing how they're going to cut that amount of cost out. They are making some pretty serious improvements and efforts, but I don't think it's going to be enough. So if you do all this work and you're still in a situation where your gross margin negative, I think it's going to be ugly. Yeah. I
Okay.
I, I feel like Rivian, it sounds like Nvidia. I feel like Rivian, they're too scattered, so they weren't focused. So, Tesla did it model by model. So at first they did the Roadster, and they had that whole process and that whole mess with the Roadster, and then they did the Model S. But they didn't IPO. Let's see, they IPO'd around the time of the Model S, right?
Right, I think so, yes.
But they got profitable as the Model S was fully ramped.
Right.
So they got profitable briefly before they started the ramp on the Model X.
Yeah.
Um, and that's focus. That's the kind of focus Rivian needs. But instead, Rivian went after like 3 different models at first. So they have the delivery van for Amazon, they have the truck, the R1T, and they have the SUV, the R1S, and then they added a smaller delivery van for Amazon. And it's like, you don't, until you can get one model right, let's not be adding new models.
And as somebody who actually wrote an article 20 years ago for Inc. magazine, from virtual to vertical, everybody seems to want to follow Tesla to being vertical when that is not always appropriate. It's not always the best solution for every company, every management team, every vehicle, to always follow the leader on this verticality. Elon only went vertical when he had to. That was the same with my plant. We started out 100% virtual. I mean, we literally didn't have a building or any employees. And over time, we only went vertical when we couldn't find a supplier that could provide us with the right part at the right price that worked well.
Mm.
Or where we saw that we thought we could build it cheaper than anybody else could build it. There was a supplier, an OEM. So I think that could have been another one of the problems that they had. They should have been using suppliers until they realized that they needed to have the vertical approach, because that cost a lot of money to go vertical 100% in the very beginning.
Mm. Yeah, maybe that could make it where it's been tougher for them. Tesla's definitely has a good number of suppliers. But like Tesla also ran into situations where early on, because they were a smaller customer, they would just get treated very poorly.
Yeah.
So I think they ran into that with the 12-volt battery on the Model S or something like that, where they just got a ton of really bad batteries because the supplier just treated them, so poorly. So like it could go both ways, but I think you're right, where if you don't have the scale, and like the really disappointing thing from Rivian, I know they reported another quarter since then, but they did 50,000 vehicles last year. They really needed to get to 100,000 with one model. They're at 4 models, but with one model, they need to get to 100,000. And they said, we're going to do 57,000 this year.
Right. Yeah.
They desperately need to get to scale.
Desperately need to get to scale. All right. Well, so as an you of course are in the business of helping people with their investments.
Mm-hmm.
And you have a bunch of folks that are like the folks actually in this audience. My guess, I don't know for sure, but my guess is that almost everybody that follows this channel is invested in Tesla. They might own a Tesla, they might own Tesla products and or own Tesla stock, or intend to, or are thinking about, or might end up owning some Tesla stock. So we have all that in common, which is what makes the channel interesting. You have all these folks around you, and I have a few questions. You don't, maybe in some cases you'll feel like you can't answer, but if you can't, let me know. All right. After 2 years of flat results, are you having to talk many of your guys off the cliff?
I would say generally not. Most of them are patient. So, patient is through, the ups and downs. And it's just been a very long period of time. So that requires a lot of discipline. I think in general, they've been all right with that. And generally they worry a little bit about the vote, like how's the vote gonna go. They're curious about the sales and the profitability, and what the next catalysts are going to be, but they're seem to be very encouraged about progress in FSD and what we're seeing with Optimus, the Tesla bot.
Do you feel like during this period there has been an inclination to take a little bit off the top, to trim some back, or to take the new funds they might have available for investment and spread them around rather than doubling down on Tesla? Or per the old saw buy low, sell high, are they saying, wow, this is the last stock on the stock market that's still low?
Mm. Generally, the folks we have, they haven't, suddenly ordered us to like sell Tesla and buy Nvidia. We gotten some questions, so people have been curious, but they've stayed open-minded enough to like hear our answers about it. Like we feel the easy money's been made in Nvidia. So that's just our opinion, not financial advice, and past performance may differ from the future, but I in general we're not seeing people make big moves or because ultimately our rebellionaires, they control what percentage they own in Tesla.
Sure, of course.
So we don't tell them, hey, you need to be this percent or that percent. If we think the sentiment's low, we might say something that we think we're closer to a bottom. Is there anything you want to do differently? That kind of thing. But we don't. We're not advocating for them to have a certain percentage.
So in past conversations with you, I feel like you've been pretty conservative in how fast and how high Tesla might go once the robo cabs and the Optimus are released into the wild. Ron Barron says 5 times. Cathie Wood says $2,000 a share, and that's without Optimus. So you have a long-term price target in your head in terms of where you think Tesla goes once the Optimus and the RoboCab are actually, products bringing in revenues.
So Matt Smith and I, we released a deep dive in January 2023, and we talked about a stock price valuation of between like $350 and $380 a share. And what that was based off of was the automobile business being profitable by itself, a useful driver assist program in FSD that caused the take rate to go up, and the value that Tesla charges for that to go up over time. I know it's done the opposite as far as the price Tesla's charged, and then also the storage business, and essentially when you project that forward, which is what Ron Barron was doing, he's saying in 2030 we think it's going to be about $1,000 a share. That's kind of what I heard when Ron was saying that, and that's about where our valuation would put it from January of 2023. That's not a guarantee,
right?
So I still think that's on the table. It looks a little different now. The automobile business is a bit more challenged, but the robotaxi business, might be, even more probable now.
Right.
And we didn't even put a value for robotaxi or Tesla bot in that valuation.
Okay. All right. So you haven't done that yet? You haven't created any kind of a projection for sales, revenues, profits, and or stock price based on robots of either type?
We have a video where we look at increasing take rate for full self-driving. So, once it gets that good where, provided this happens, but where you only have to disengage once a year, I think more people are going to subscribe to it and buy it and use it, especially in the United States. And that'll be economically meaningful for Tesla. We have a valuation. So we have a video for that on our Rebellionaire channel looking at FSD take rate.
Huh?
We also have a video for Optimus that looks at a scenario for that. And essentially, we think like once it gets started and gets really in gear, as long as it can be as useful as a human worker, so as quick, but then like never get tired or have issues and be able to work 3 shifts a day. We think the value for that is going to be enormous. And I think our valuation, if I'm remembering right, is something like $3,500 a share.
3,500 share just for Optimus.
If they can make it that useful, and if they're first to market on it being that good, and like having enormous scale, being the number one
Right.
player, having that enormous scale. So again, not financial advice.
Advice for your entertainment value.
Don't buy on this basis or whatever. So yeah, that was just an exercise we did in looking at some things. And there were some things, some assumptions in there I think are conservative.
Yeah, yeah,
So we assumed for a long time like that the bots um, may be very efficient and the humans will drop the ball. And so like we won't be able to feed the bots as quickly as they can take the work.
right.
So that'll cause them to be only utilized 2/3 of the time. Um, there was another thing where we just kind of cut the value in half. So, um, the $3,500 might be conservative, as far as the value. But
Sure.
here's the thing, Randy. It's like, even if these profits start flowing through, Wall Street's not going to give them full credit for a long
Right.
time.
Yeah,
And even when it seemed obvious for me on Nvidia, it wasn't obvious to everyone else, till like a year later.
yeah. I will say that the robot, once it has a proven use. So I think that, I keep thinking that if they're shown working in the factory and it's more than, 10 or 20 or 30, I mean, it's like a lot of bots actually working in the factory, actually doing a lot of different jobs, that will have a huge catalytic effect. But I think it will take another year after that to literally see that there has been this continuous usability, the increased capabilities, people reporting back, kind of like Pepsi reporting back on the semi truck. Those kinds of things will have to happen, and unit sales actually going out the door at, some kind of profit, before you start to have people, before you have a lot of people putting on the kind of valuation that you just did long term. But good for us. I hope it takes them a long time to
Yeah.
figure it out. So sometimes the market movers are spread out over weeks, but at other times they just seem to come at you all at once. We are going to have the next 7 days are nuts. We're looking at the jobs numbers tomorrow. Actually, I think we also get consumer confidence tomorrow. We got the CPI, the PPI, the Fed decision, the small business report next week, not to mention the Apple Developer Conference and the Tesla stockholders meeting. I'm going to be exhausted. I don't know how I'm going to be able to manage the show. So by this time next week, by Thursday
And
night,
we might have FSD beta 12 12.4 in customer hands. It went out to employees last night or today. So
two
uh
also
and there was a early review of that was really bad.
really bad.
And this was like a couple weeks ago.
Oh, that was 4.
But it turns out that the person needed to calibrate their cameras. So like once they calibrated their cameras, um,
Changed
like
it.
the newer version of it that they have. So this is an employee.
Yeah,
Like they're seeing some obvious improvements.
that's good. Good to hear.
And like they said that normally on their commute they have like 2 interventions or disengagements, and now it's 0. So they're seeing some improvements.
Okay. So with all of those things happening over the next 7 days, do you as an investor and an investment advisor, do you hedge for this kind of a week, or even just in general? Do you look ahead at tomorrow's labor numbers, think about what they might be, how that might impact stocks? And if so, what are you thinking about this next 7 days? Are
Yeah.
you hedging in one direction or the other? What are you thinking?
We don't try and predict the economy or how the market's going to react to economic numbers. But one thing we do at Rebellionaire is we sell cover calls, and we tend to do that on a weekly basis. So we sell a call for a week out on a Friday. We do it higher than where Tesla stock is trading. But like on a week like next week, we might skip doing that, or we might write a cover call on a higher strike
Uh-huh.
if we think that there could be a significant positive surprise.
Gotcha.
So
Gotcha.
how we handle it's going to vary, but Matt and I, we put our heads together and look at both qualitative and quantitative factors and
Sure.
deciding what, whether we do it and what it looks like. So that's one thing. I do think the vote's going to go well.
Yeah.
But I think it'd be hard for people to, let's say you add right before the vote, because like a lot of people don't think the stock is going to go up if Elon's comp plan gets approved or
Right.
re-ratified.
Right.
But I think it's a bit foolish to think that the stock's going to go down a bunch if the vote goes against, but
Right.
that it's not going to go up if it goes for. Um, so like, I think it'd be tough if you added thinking the vote passes and then, suddenly um maybe it doesn't, or maybe there's no reaction or whatever. I think that I think it's tough to like try and play things on a real short-term basis with a lot of dollars.
With a lot of dollars, right? So
Yeah.
this will be play money and not investment advice.
Yeah.
So I personally, I've been talking about this for a while on this channel. I think that the jobs, the CPI and the PPI this week will not be a big deal. I think they're going to be pretty much what we're expecting. I don't see anything. I read so many reports now, and all the reports that I'm reading, I don't expect surprises this week. Sometimes I expect surprises. This week I don't. I think the big story might be the small business owners, because we've got that report coming, I think, Tuesday. And I'm seeing a lot of suggestions that they're not hiring at all. So that means they might be starting to lay off, and that their incoming price, their what do you call it? Their costs are going up, and they're trying to pass them along. If those two things, if it turns out they're not hiring and that they're still seeing inflation, that could be the most important report next week.
Yeah, I feel like the macros incrementally gotten worse. The Chicago, uh, I forget what index it is. Like it's worse than it was. Like it's in a really bad spot. So
Very
like
bad. Yes.
I think it's been in like a recession or contraction for like 11 months or something crazy like that. And typically it doesn't go longer than a few months. And we don't go into a recession. So people aren't even thinking about recession yet, but we had that GDP now estimate that what used to be at 3.5%, went down to like 1.4. So like things are looking a little less rosy for sure. It's a bit concerning.
So I know you've
Here's
got.
something that's funny. Like there was some poll done, and I'm not sure who the group was, but people said they would prefer a recession rather than this inflationary
Yes.
environment
Yes.
continuing,
Yes.
which seems a bit nutty to me. But like we're so over this inflation, aren't we? We're
Yeah.
so over
Yeah,
it.
we're so over this, right? Yeah, I mean, I don't know if you and I talked about it last week, but pretty much I think Nicholas and Jeff were both agreeing this week. We got two economies right now. I mean, there's always a difference between how the well-to-do do compared to the not so well-to-do. But I think right now there's a very big divide, and there's half the people, maybe around half or 50% of the people are doing okay. They can afford to go out to dinner, even though the prices are nuts. They can afford to go, get on an airplane and travel. They can do all those kind of things. They can buy a new car. But the other half of the population has been slammed by this inflation. And I did an early report today. I should have brought this chart up, but where the chart showed that for the last 2 years, the purchasing power of the hourly wage has been dropping, probably the worst in 40 years. So when that group of people are saying that they are hurting, that's where the hurting is coming from. That's the thing that the Biden administration should be looking at even more than the border if they want to get reelected, because if the purchasing power of your hourly wage is not keeping up, you feel really, really bad.
Yep. Definitely feeling pinched.
You're definitely feeling pinched. So that's kind of how I'm seeing it. You have a new favorite pick. I was trying to remember if we talked about it
I don't know
last
if I call it a favorite, but it's new. Yeah.
It's a new pick that yeah, okay. I'll let you describe it any way you want. I forget whether we
Yeah.
talked about it briefly last week, but go ahead. Talk to us about your new idea.
Yeah, so we've begun to reveal it. We'll probably make a deep dive video on this, but I'll explain it at a high level. The company name is Maya Biotechnology. MAIA is the name and the ticker. It is very risky. It's a small cap stock, or actually a micro cap. So the market cap is under $100 million. So they call that micro cap,
Okay.
even
Yeah.
though that's a
That's a really tiny company.
yeah. So here's the problem they solve. With all these
Cure cancer. They cure cancer. Come on, get right to them.
yeah, with all these cancer treatments, uh, there's unique things about each cancer that the various drugs have to deal with, like different spike proteins or whatever, different targets and different like interactions. But what they found, and I don't know if this was about 10 years ago, is that for 20 major cancers, there's an enzyme that's active called telomerase. And this enzyme is active in our bodies when we're up to 1 years old. So it's very important when our cells are rapidly dividing and we're growing, and it creates the telomeres that cap our chromosomes. And many of you may have heard of the telomeres in relation to aging. So because the telomerase goes away when we're 1 years old, over time those telomeres become shorter and shorter, and our DNA in our cells becomes more vulnerable.
Got it.
And so there's this telomerase enzyme that is potentially a common target that can be targeted. And Maya Biotechnology has a molecule that looks like the G in DNA, which is guanine. So it's one of those 4 letters in DNA. So the telomerase grabs their drug and incorporates it, and then it damages and potentially destroys the telomerase and or the cancer. But it also ripens up the cancer so that a class of drugs called checkpoint inhibitors, it's also called immunotherapy, can act on the cancer more. Where they're at right now is they're in a phase 2 clinical trial. So it's on humans. It's with non-small cell lung cancer, which is the biggest killer in the US. It's the biggest group of people. And the trial is on people who are resistant to
Mm.
checkpoint inhibitor drugs working on their tumors,
Mhm.
who may also be resistant to chemotherapy. And what they found so far is that this solution may be superior even to chemotherapy.
Wow.
So for this wide group of people who are resistant to immunotherapy, their drug may be very effective. So we're pretty excited about it. It is very early. There are a number of risks. So the drug trial could go bad. The FDA could take longer to approve. This company doesn't have a lot of cash, so they constantly need to be selling some stock to be raising cash. So they have to dilute shareholders. Um, they might not execute properly, even if they pass all the other hurdles.
Yes.
So there's a lot of risk to it. Um, so we're pretty excited about it, and I guess we are going to do some videos about it, but there are some other drugs out there that try and assist these checkpoint inhibitors, and these companies are worth around 4 billion. Maya's solution might be superior, and right now the company's at 100 million or less. So that's what has us excited. So even though there probably is a high chance of failure, like Elon's thought about his companies,
Right.
we think the potential of a multi-bagger compensates us for that risk.
Got it. All right. Well, cool. So people can watch for your video, and if they want more information, they know where to find you.
Yep, rebellionaire.com.
rebellionaire.com. All right. Well, let's take a look at where the market is now. Let's see how things are going as we approach tomorrow. Well, we've got let's start with what happened today. We have the Dow was up 78, the Nasdaq down 14, S&P down 1. So pretty sideways today. Tesla was up 3. In the after hours, Tesla down 32, but that's not pretty good day all in all. All right, and then
32, like not 32 points. So
32
yeah,
cents. I'm sorry.
32 cents. Okay.
I'm so sorry. I forgot the decimal point. Yes, that's very important.
2 orders of magnitude.
Just only. So bonds had slid like 30 basis points over 3 days. They kind of came back up a little yesterday and then again today. So we're now looking at the 10-year up 1.4 basis points in the pre-market, sitting still though under 4.3. It had gone down, I think, to around 4.27. Right now it's at 4.295. The 2-year is likewise up 1.2, but continues to be much wider spread on the inversion than it was a few weeks ago. And the 2-month is actually up 2.3 in the pre-market rather. And that puts it now at 110 basis points higher again. It had been down to
So
70.
that's another indicator of recession where
Another
it
indicator.
re-widens.
It re-widens, yes. Now some folks say that when the recession is actually going to start, it starts to collapse. But that could be because the Fed is trying to solve the recession.
Lower rates. Yeah.
Because so which is first, the cart or the horse, not real sure. This thing is so I report this every morning and every night. And eventually, maybe we'll all understand exactly what happened. Right now, nobody seems to fully, because this is almost 24 months. It started last July. So it's 2 years ago, 2 years ago, July. So it's really crazy.
So Randy, we were here in November. We were talking about how hopes of a rate cut were extremely high.
That's right. 5 of them.
People were talking about, as early as March.
Yes.
I said, no way. It won't be before July. We're in June now. So
It's not going to be next week.
We made it this far. I think like the hopes have collapsed so far that like, are people thinking there might be one this year?
So the market, what do you call it? The pundits that are told on it, and then you've got the actual market
Yeah, the Fed funds forwards. Yeah.
Yes, so you've got both of those. Anyway, right now it's looking, people are thinking there's going to be two still,
Okay.
probably like a 57% chance of July,
Okay.
a much larger chance of November. And some people, September, a slightly larger chance of September, and then a much larger chance of November.
Mm.
My personal one is I'm saying it's off the table till November, because there's not going to be enough data in time before the election for the Fed to take the risk of looking political.
Mm. Okay.
That's my
All
theory.
right.
Okay. Well, have you changed your theory? Are you
No,
still saying
let's
July?
go to the next futures.
Not till the next, yeah, next Thursday. Now,
Let's go.
next Thursday.
Let's go to the next item.
Okay, go to the
I
next
like
item.
your theory. Interesting.
So, oil is a little tiny bit at a time is picking up from the big drop off that it had last week. So up another 17 cents in the pre-market at 75.72. So that is a little, and Brent has actually gone back over 80 cents. I mean, $80. So that kind of surprised me. I thought that that might stay down, but if it keeps on creeping back up, that'll be another nail in the coffin of inflation, because natural gas is just roaring. It's up at 283, 282 actually right now, up another 0.07% in the pre-market, and it was up solidly today. So yeah, those are all currently, at least today, going in the wrong direction.
Yeah, supply of American oil has been shooting up. We're number one in the world now. Is that right?
Number one in production, yes.
In production, yeah.
Yes.
And OPEC is needing to pull back because I think some members of OPEC they can't produce it as cheaply as Saudi Arabia. So they're almost like conceding, market share to the US, which is a total 180 from what they did in 2014, where they flooded the market with oil to sucker punch American oil production.
Right, right.
So it's pretty wild development.
Pretty wild. Yes, and we're in such a great position right now because we decided to keep producing lots and lots of oil and natural gas. And even the Biden administration has produced lots and lots of oil and natural gas, contrary to their plank. But it's working out. Again, I'm an all of the above guy. I think we need to do all of the above until we don't.
Yeah.
I hope there comes a time when it's all renewables. I'm all for that. I hope it happens. But until that happens, the only people that are going to get hurt if we can't put a cap on oil and natural gas is going to be the poorest of the poor. They're the ones that are going to get stuck with the bill.
Energy is the lifeblood of our economy.
And it's, again, that kind of energy, expensive energy hurts the poor tons more than it does the well-to-do.
Yeah.
Gold up $5, 23.96, looking like it's going to go back over 2,400 again. Some people are saying that it's on its way to 5,000. Any thoughts?
No.
Okay.
I focus on productive assets, assets that have earnings and dividends, things like that.
Okay, so the miners. So you like the gold miners, huh? Silver up 0.26% in the pre-market, and copper actually taking a little breather today, down, or at least right now, down 0.26, but still sitting at over 466. So it was at 520, I think, about 10 days ago, maybe 2 weeks. Dollar flat again. Probably not going to, the dollar is probably going to be another one of those ones that could be whipshod in so many different directions over the next 7 days. We'll see what happens. Bitcoin down 320, but still almost at 71,000. Is it going to go to 100,000 in this year?
I have no idea. I'm not qualified to answer that.
I'm qualified to answer that. All right, let's look at the equities. The equities are they're not quite unch. By the way, I'm using that other times now, not just when you're on. So we've got the
it's short for unchanged.
Yes, short for unchanged. So the Dow's up 25, which is 0.06. The S&P is up 0.5, which is 0.01. I mean, sorry, down 0.5, which is 0.01. And the NASDAQ is up 11, which is 0.06. So pretty darn close to not going much, not much evidence of what we can expect tomorrow. Because tomorrow we'll not know what we can expect until we get those numbers early on. So, by the way, I did want to mention one of my videos from earlier today. I did this video earlier today. Cern Basher is on vacation, so I decided to take Cern's place. And so I put up a bunch of charts and graphs and spoke to him. And I think it turned out okay. In fact, I think there was a lot of valuable stuff on that. So I want to just put a card up for that. And then we were going to put up another card. Oh, you thought we should put up a card for Rebellionaire? No, it was going to be for baby
Alexandra Mers
Yes,
appeared on Dave Lee on Investing and had a really great video about the upcoming shareholder vote and a lot of different implications that I think many of us don't know, that I didn't even know all the implications and all the derivations. So even you, Randy, I think you would benefit from having a listen to that.
I will definitely listen to it and report in the morning if I find some cool stuff. All right, then. Bradford, is as always so lovely to have you on Thursday nights, sharing your enthusiasm for Tesla and all things Elon Musk. So any last passionate thoughts for you?
I'm looking forward to 12.4, seeing how that does and seeing how it does over a number of weeks and what that combined experiences looks like. There may be some steps back with it if Tesla is asking it to do more, like to do more in parking lots and automatically park at the end of a drive, and I don't know if they're doing reversing yet. I don't think that's a thing yet, but
might be.
As they expand what they're asking it to do, we might initially see some kind of regression. So I'm just curious to see the shape of it.
Okay. All right. Thank you so much for being on the show, and to all of you out there, it's been great talking to you.